When China said it wouldn't impose another round of retaliatory tariffs, that was not a retreat from a standoff. It was a threat. Because China can take non-tariff measures and target the US defense and technology industry to counter the exorbitant US tariffs. This means the next round of US tariffs would unleash something worse than a hike in tariff duty. We got a taste of that when earlier today China banned its airlines from importing Boeing jets. This came after China had announced a set of retaliatory tariffs of 125% on the US. But China has more ammo in its arsenal, and we're starting to see what it can do. Because the US tariffs on China will hurt the US more than they hurt China. This is what the US was late to realize, while China had already put a plan in action. Let's break it down. To counter the US moves, China has taken tariff and non-tariff measures. Both these measures hurt American tech in the long and short run, with their impact spanning industries like AI, automobiles, aerospace, telecommunication, and defense. Here's what's going on. China holds key raw materials, the know-how, which is technical expertise, and the readily available trained labor that form the backbone of Chinese imports to the US and the rest of the world. American tech giants like Amazon, Apple, Nvidia, and Tesla rely on Chinese manufacturing and raw materials. These raw materials include rare earth metals, and most of them are bought from China. 90% of global rare earth metals are processed in China. If China refuses to sell these to the US, it would cause an immediate turmoil in the US financial market. But can China do it? Yes, it can, and it has. China has already started restricting its key mineral exports to the US. Here are some of China's non-tariff measures that target American tech companies. China has introduced export restrictions on 12 critical rare earth metals, which are used in semiconductors, defense equipment such as submarines, radars, batteries, lasers, and the automobile sector. China has also added 43 US defense and technology companies to its export control list, prohibiting the export of dual-use items to these companies. A dual-use item is something that can have a civilian and a military use. Another 29 companies are part of China's unreliable entity list, banning them from trading with China. Most of these companies are part of the defense and aerospace industry. The US has no alternative to Chinese tech, at least in the foreseeable future, while China is actively refusing to buy the US goods because it has other options. Simply put, China can get its agricultural imports from Brazil and its energy needs from the Middle East, which are the two major Chinese imports from the US. But the US and the rest of the world have no readily available alternative to Chinese tech supplies and its rare earth metals. Even if tech giants like Nvidia and Apple promise investments, training, and manufacturing units in the US within the next 4 years, this will not happen without an immediate market crash in the tech industry. Even Tesla's production is projected to take a hit after imports of its technical components from China were suspended. Tesla also relies on Chinese processed battery-grade lithium for its automobiles and is now caught in the crosshairs of this trade war without an alternative. This is why Elon Musk has distanced himself from this trade war, because his own business interests are at risk, just as the rest of the US tech giants. If an established business cannot survive the current trade war, it heralds gloomy prospects for new manufacturing setups. The US was too late to realize this. This is why, despite the concessions granted by the US president on semiconductors and electronics, in hopes that China too might back down, China only grew bolder. It seems the US has to retract a lot more to undo the damage it has done, to get its hands back on the precious Chinese tech